Good morning, YouTube. This is Signet from the Bullish Bears. It's Wednesday, January 15th, 2020. If you are a member of the community, you might have seen me in the schedule as Mike. You can type in Mike, type in Signet, you'll get my attention either way. Good morning, everybody. We've got a pretty decent list today. The markets are moving around quite a bit. Target had a bad December, and so they're taking a little bit of heat this morning in the pre-market. We've got a pretty decent list of companies that are having earnings today. We will most likely be putting on some earnings trades between this afternoon and the end of the week. I play earnings by playing the volatility crush. I don't really focus on getting directional trades. Most products that have earnings, they get very volatile. They whip around a little bit, and then they just settle right back into place again. And that is what we want to take advantage of. We know one thing that's guaranteed when we trade earnings, and that is that it's going to get a vol crush. Now, there's no 100% anything in the marketplace, so there's always a possibility that there won't be a crush. And in fact, I've actually seen a company who had earnings and their volatility went up. I didn't think that was possible until I actually seen it happen, and that was with Beyond Meat. So before I had seen that, I'd always said that vol crush, or at least a decrease in volatility, is a certainty at earnings, but I can no longer say that because I've seen it for a fact. Good morning. How you doing? How you doing today? So with these volatility plays, what we do is we go in and we build options trades that look to capture a decrease in implied volatility. We can't predict with any certainty whatsoever which way a market will go when it reports its earnings, because it's about forward guidance, and that's not something that we have access to. It's about the way that they present the data, and if they screw it up or don't sound positive enough, then the market won't move in any direction that would make any sense. So we can never try to play directionally unless we're just going to put on a lottery play, shake the dice and throw them on the table. But we can always find a way to play on volatility. CETX. Jump over there and take a picture. What a piece of shit. So let me guess. You want to trade something that looks like this because you think trading penny stocks in a small account is your way to get ahead and change your life and get into financial freedom. Hey, if you got a small account and you're trying to grow that small account into a large account, why don't you try trading something that doesn't have PDT and has leverage? If the futures move $1, you can make $50. If the futures move $1, you can make $20. The Nasdaq makes 20, the ES makes 50. They have micro products. You can open an account for $250 and you can trade a leveraged product that when it makes a $1 move, you'll make $5. Or if it makes a $1 move, you'll make $2. And it won't be some pump and dump crap company like this that will drop in the blink of an eye and leave you holding the bag. Just a thought, by the way. And if you want to check out more about that, you can come over to the Bullish Bears. We discuss it often. And then you can also stop by my Discord. So let's take a look at this on a 5-day, 5-minute. And let's see if we can try to anticipate what's going on here. CETX, did it have any news? Was there anything in the pipeline? Nothing in the pipeline. They received $700,000 in new video surveillance systems orders for municipal buildings. Huh. So some government contracts maybe, huh? Well, that would make sense, I guess. Check the institutional ownership. It's really low, hasn't changed that much. Doesn't have a really great short float, so won't be looking at this for any kind of short squeeze, but the possibilities are still there to get a pretty decent trade. This move is from that news. I would not expect it to hold. So definitely don't try to bag hold any of this. You'd want to get in, get out. Uh, let's go out to a higher time frame and see if there's anything anywhere to the left. And there it is. So that 250 round number always should be something that gets your attention. The quarters, the 50 cent, the round numbers. And then looking left, you can see that we've got a history here that is concerning. And what I recommend doing if you're going to trade anything is always bring out the larger time frame, load up your drawing tool, and hit these pivot points. This can give you quite a bit of a heads up into a price shelf. That way, when you see price moving, you can anticipate rather than react. Now, the extension wasn't on. That's nice. That's all right. All right, so we're looking at that 250 as the first level of rejection. We would want to see this play in lockstep with the Fibonacci. So from these lows with the earnings, we'll just pull up to the 250. How did they do on their news yesterday? Do you know what their news was? Is Tesla gonna free fall? Well, I don't know. I left my crystal ball at home. Nobody can anticipate swing trades into the future. All we can do is look back at what price has done and anticipate a reaction to previous levels. Well, if you look at Tesla, quote, previous levels aren't there. So if you throw an angle on it, that's all we got. Nobody knows if this is going to just dump, and there is no pattern right now. It's literally just running straight up the side. And when there's no pattern, we're not playing a flag, we're not playing a wedge, there's nothing to play. So you have no edge in trading something like this other than to day trade it or to get into an options trade like a back ratio or a ladder. That way, if it dumps, you break even. If it runs, you make profit. And if it stays sideways, well, then you're going to lose money, right? That's a 2 out of 3 where you don't lose money kind of trade, which I like a lot better than a binary trade where you either win or lose. Looking at the consistency of that move, we could say Tastyworks has a very aggressive trading strategy called the aggressive contrarian, that if a market makes this big of a move, you sell into strength. It has a very high win rate, but it's a swing trade, it's not a day trade, and you could be holding on to that trade for 90 days. But it does have an 80-something% win rate. So, aggressive contrarian, you should be able to find that on the Tasty Trades video series. I haven't done one myself, or I would say go look at my video, but you know. There is a strategy for any type of market movement. The idea that you want to play that strategy comes down to its win rate. What else do we have here? CETX, Tesla, BYND. Pushed right into structure and took a rejection. Come on, Thinkorswim. Get your act together. You laggy bugger. Nice bull flag. It's a little concerning that it made this consolidated base here and then lost it. A lot of volume at that 110 range, which is where we're sitting at now. 110.50, 110.60. We're right in that sweet spot. The Fibonacci, it's already broken through a couple levels. We can throw it on there. I would really look for this to hold above that 618, and if it doesn't, your next major level of support will be that 50, which would be this price shelf right here. If we're looking at it from the big picture, this thing has continued to trend up, and this is a company that keeps growing its base. It has spread out to a lot of different fast food companies, and it keeps getting bigger and bigger and bigger. Analyst estimates on this thing, I think, are pretty high. You can see we're at 117. Let's throw up the Discord, hit the price targets. Yeah, there's analysts that are actually calling a 185 on that thing. Now, it doesn't give their time frame for that with just this single command, but it gives you a good starting spot. See if it's on an upgrade list. No. Maybe the downgrade list. Yep. So, okay, it took a downgrade, and that will more often than not affect it in the short term. So, something to be aware of. All right, everybody, give me just a moment. I need to fire up the live stream in the room. And don't forget that you can come by and get a 14-day trial at the Bullish Bears. And if you sign up for the year, you get access to the educational content that I've developed, next level options education. Good morning, everybody in the Bullish Bears. This is Signet. It's Wednesday, January the 15th. It's 9:15 in the morning. I was just taking a look at Beyond Meat, and it had taken an analyst downgrade. Target missed some sales numbers, and it got beat over the head a little bit. And good morning. We'll be looking to put on some earnings trades later in the day, and most likely we'll be putting on a total of 5 for the week. I don't like to put on too many at once. Don't like too much of my portfolio wrapped up into earnings trades, but a little bit of diversity is good. I love trading finance, and when finance is on the table and is having earnings, hey, I want a piece of the pie. So we'll be putting those on later in the day because we want to get into those near the close. And we trade volatility, not price. We don't care what direction it goes as long as it reverts back to the mean. We do have a day trade list that was posted on the Bullish Bears website, and you can find that in the penny list. There was a swing trade list as well, but it only had one ticker on it, so I threw that ticker into the same watch list that I was already using for the day trade. CRON, AMRX, BPMX, and the list goes on. I did add that one single market from the swing trade onto the day trade list. You can find this if you go to lists and you click on the day trade watch list. All right. I do believe that the trade ideas gappers is updated, and of course you got your scanners. Guys, we talk about strategy a lot. The gap is the first trade of the day if you're not a pre-market trader. From the gap, you got your open range, and then from the range, you're trading either a continuation or a reversal trade strategy. This does not have to be rocket science. So, developing a trade strategy that uses gap, open range, and then learning one continuation trade pattern like the flags and one reversal trade pattern like channels will give you a very Swiss Army knife toolbox to let you trade 4 different types of market. You'll always have a trade. Every single day you will find a trade. So that should give you something to focus on, to narrow down. Everybody that I deal with in my coaching sessions and teaching and education, they say that there's just so much out there that it's hard to narrow down and really drill into something. They feel like it's a vast ocean of possibilities and styles and strategies and tactics, and it just becomes this overwhelming concept. So if you just dial things back and focus on one thing at a time, gaps, open range break, channel, flag, learn one continuation pattern and learn one reversal pattern, and I promise you, you will find a trade every day. Thank you, Rose. So Rose just posted the TTM Squeeze Ninja Trader 8 indicator, and that will be in the room drive. If you don't know where the room drive is, on your screen here in the chat room, look up and to the middle right, and you'll see a folder, and that is the room drive. In there, you will find all kinds of things, a morning checklist for identifying trend before the bell, indicators and tools, strategies, the link to my own personal Discord, all kinds of great material in there, not just for Ninja Trader 8, but also for Thinkorswim. Is there anything in particular that you guys want to look at before we get going? We have 9 minutes, by the way, 9 minutes to get our act together and get a plan. This list that I'm looking at here is what is most popular right now on stock twists. And so I'm going to keep that one on the forefront today. CLVS is one of those markets. So we got to call out CLVS, Bank of America, which, by the way, Canada, Bank of America is something I love to trade. It's on my day trade watch list. But let me give you something that you might want to look at. BK. BK is also a banking stock, and it's kind of in that same price range. And this thing is really fun to trade. It makes some great moves, and it's actually replaced Bank of America for me as one of my day trading financial products. So anyways, BAC, let's go take a peek at BAC. My goodness, Thinkorswim is just slower than molasses. Dropped down to these previous support levels at the 34.5 and rebounded. When it comes to earnings plays, this is exactly what I'm talking about. We want to see a market get that volatility and then revert right back to the mean, so that when we play an iron condor, we trap price right in the middle of that. So the rebound looks solid. Real quick, just to make this easy, I know that there's people on their mobile, and trying to get that text document out can be frustrating. So let me just post that into the room real quick. It'll be up top. You don't get access until I give it to you. So just send me a message on there. And when I get free time and I'm not streaming, maybe after the bell gets going, I'll get over there and I will give you access. Let's see, where is my, there it is. We need that up. So Bank of America, no surprise, right down to the 345. We look left, we can see the price shelf that it hit, and we expect this to just maintain its range. Now, if the volatility through the morning gets worse, then we could see this not be a bear flag and actually turn into a trend lower. So if we snap that fib line, you can see that right now we're just in a pullback. This is the age-old question. Is this really a pullback, or is this a change in market sentiment? Right now, it's only a pullback. Okay, this is only a pullback, and we would be looking for the move to continue lower. I would like to believe that it's going to prove me wrong, and that it will do what we expect most markets that have earnings do, which is have a lot of volatility and revert back to the mean. Yeah, an iron butterfly, huh? You kind of screwed yourself there. Should have went with an iron condor. You should watch some of my videos on earnings so that you would have known to put on an iron condor and not an iron fly. Good morning, Lucian. Rhonda's calling out Netflix. It's one near and dear to my heart. Netflix and chill with the family has become our evening routine. What would we do without it? Mel, oh my goodness. Are you the Mel that used to hang out in the swing trade room all the time? Welcome back. I haven't seen you in forever. Hey, good. Good to see you. Wow. It's like a reunion today. So, Netflix yesterday closed the gap. I mean, picture perfect. Talk about gap plays. And then did absolutely nothing. And if we look left, this is sitting right at that pivot point that was the previous high. They're getting a little bit of news, as they always do. The FANGs or gangs or whatever their new acronym is at this point. It's stretched beyond its expected move yesterday, just slightly, and came back inside the box. And if we throw on the light right there, you can see we had breakout, fake out, breakout, fake out, and we're coming right back down to that range again. This has the opportunity, with persistence, to beat the resistance. So I'd be watching this today to see if you get an opportunity. Day trading it, hey, that could get pretty exciting. As for a swing trade, well, you got earnings, so when it comes to understanding the idea that you wouldn't want to put on a swing trade before earnings. You really just don't have much of a choice to do anything rather than day trade it. This is that gap that needs to be recognized back here. And I can still hear Lucian in my head today when I was a new trader and I knew nothing about price action whatsoever. I stumbled across this video and met Lucian for the first time on YouTube where he was talking about gaps must fill and price just wants to do it. And I thought this guy is completely and utterly insane. He must have fallen off the rocker and he didn't get back up. The light bulb ran dim. I was telling myself all this stuff until you go look and you realize, holy cow, price wants to close the gap. And it just gravitates in that direction. So maybe that guy wasn't crazy after all. S-H-A-K. Shack. I do need to get some of these indicators off. It's driving me crazy. So let me do that. That way we can clear up some of this mess. When I'm on a day intraday chart, that's what it was designed for, but the way it is right now on a day trade chart, that just doesn't work. Can't see anything in all that mess. All right. So, talking about filling the gap. First thing that we need to recognize is think about driving down the interstate. This is the current lane that price is driving in. And if you've ever watched anything from Tom Busby, he talks about a market that breaks out and then comes back to validate the breakout. And this is breaking out of this range finally. But you don't want to chase it. You don't want to jump into it. And what you would expect or anticipate is that it comes down and it validates the range before continuing on. Now, if you wait for that, you will stop yourself from getting into those trades that come against you. But if you wait for that, you're not always going to get a trade because there are going to be times where a market doesn't pull back first before continuing on and it just continues on. That's the difference between a confirmation trader who struggles with being left behind or an aggressive trader who struggles with taking heat because they didn't wait for confirmation. Okay, so there's not a good on one side or the other. So Mel brought up a great point. Why not just use a stop or a trailing stop? Stops are a lot like religion and politics. You can't convince anybody that they're good or that they're bad. Whatever your opinion is of stops, pretty much is set in stone, and you're not going to want to listen to what anybody else has to say. I believe stops are a tool that do not work for every kind of trade, and that if you're going to use a stop, it better fit your trade strategy. Otherwise, it's doing you more harm than good. So I'm looking at the indexes, the money flow. Russell popped strong to the upside and is leading. That's the bulldog. The money flow is bearish. We got bearish divergence in the Russell. Be very careful of that pop. I'll bring up what I'm looking at so you understand. We're waiting for price discovery anyways. We've got a good 5 minutes to let the market stabilize. If you go into the money watch, come on, Thinkorswim. Goodness. Notice that the declining issues is We're just going to use rounded numbers. This is 1,000 markets. We call it a 60-40. 600 are going up, 400 are going down, but there's twice as much money going down than up. Bearish divergence right there. Be very careful of that sudden spike in the market. The S&P also bearish divergence. 60-40 as well. Jump over there. What we're looking for is a market to finish topping out and begin moving back down again. Here you can see 60 are going up, but the money coming in is not higher than the money going out. This is bearish divergence. This is very important to understand. We're not looking for a continued move up at this point. So reversal plays or take the ride to the upside with a very clear understanding that you need to keep a tight leash on your profits. The S&P is pushing right into the pivot. The same with the NASDAQ and the Dow. All three of those are pushing right into their price shelf. They're at their reversals. Jump over here to the flex grid real quick. We can see this. Here's the S&P pushing right into this resistance. And if we bring out the NASDAQ a little bit, pushing right into this resistance. Here's the Dow. Again, right into that resistance. The only one who isn't is the Russell. It broke well above all of those price shelves. And Matt, I have no idea because I've never had IBKR. I've had Fidelity and E-Trade and TD Ameritrade, and I've had CMEG and Robinhood and Webull, and I've had Tastyworks and Ninja and Tradeovate, but I have not had that. This market watch should not be a proprietary thing. I'm sure you could find something like this, but don't know what to tell you. We need the list up, see where we're going here. Sizzle first, TLRY, SHAK, and PINS. Top three in the Sizzle department. Thinkorswim runs a proprietary product called Sizzle. Don't let that confuse you. It's just a 5 average. So if it's put sizzle, it's the 5-day put average. If it's call sizzle, it's the 5-day call average. If it's volume sizzle, then it's the 5-day volume average. They just wanted to use a proprietary product, and that's what they came up with because they have sizzle charts. And yeah, you can go to thetickertape.com, which is a TD Ameritrade publication, and you can read all about Sizzle and their Sizzle products. TLRY, first day pop, pushed it into that resistance at 17. Yesterday's pop, way more aggressive, put it into that pivot here to the left, right around that $21 range. And now day 3, we're flagging a wee bit. No. When you look at TLRY, take the opportunity to look at the other wheat stocks. They move as a group and as a pair. You want to see the correlation. It will give you a heads up in what direction you might want to trade this for the day. A bear call, how do we want to say this? A back ratio on the call side would be a really great way to play the bull flag here. Too many bears and bulls in that sentence. So what we're looking for is a temporary pullback in the trade in options. You use a front week option that you sell, and you use a back week option that you buy, And instead of doing the same strikes on both, you use a higher strike on one and a lower strike on the other, and it creates a skewed calendar, which is a back ratioed calendar, so that in the fade, that's where you get your arbitrage. I believe you might need to put like $20 in it, but it doesn't have to be like a minimum account balance to get the live data. Make sure that you go to the TD Ameritrade website and click the button that says, I want live data, because you have to ask. They don't just automatically give it to you. Because they don't, well, I just agree with a lot of things they do. But go to the website and just click the button and say you want it. Or you can just click support up here and say, hi, I want live data, please. Thank you very much. And they should hook you up. If you're a paper account from overseas, that's completely different conversation. If you're a paper account from Canada, maybe. But overseas is completely different, and Canada is treated differently than overseas. If you're in Australia, you're going to be treated differently than Canada on TD Ameritrade. So keep that in mind. So see, the best thing to do at this point would just hit chat and say, hey, I want live data. What do I need to do? So we're looking at a 60-40 in the S&P. The money flow is still bearish, so we got bearish divergence. In the NASDAQ, we're looking at a 70-30 and bearish divergence, but a very small bearish divergence. In the Dow, we're looking at a 20-10, and it's bullish. The money flow is not divergent in there at all. And then in the Russell, a 600-400, massive bearish divergence in the Russell. Be looking for that to resolve itself. And we are looking at a range day. So on the day when you're looking at the futures markets, keep in mind that it is going to be a range day unless some news comes out to push in one direction or another, and that we would only be anticipating a topping pattern and a reversal pattern. So we're past the point where I need these, shut them down. Maybe it'll speed my thinkorswim up a little bit. Is this a laggy bugger this morning? This is the high IV watch list. Nothing is standing out there, so that's out of the list. We don't need that. All right, let's take a look at the sectors. So that we can ask and answer the question, what is driving the market today? We got utilities here in the bottom right, very strong, pushing the market to the upside. Next to that, healthcare, also very strong, pushing the market to the upside. And next to that, we have consumer discretionary. All three of these bottom markets are what we call defensive. So in a time of crisis or in an economic downturn, this would be a haven sectors. Here in the middle, we've got our midline sectors, and they are presenting a lot of weakness and pushing right into pivot points. We got the industrials on the left. We've got XLB in the middle, XLE on the right, and there is nothing from XLE. Fade at the open and consolidation at the pivot. In the upper right, XLY faded to previous support, trying to hold. Tech had some movement in the pre-market and took a nice little flag to the upside. And finance, due to most likely the earnings announcements, has pretty much stayed flat. Absolutely. You will learn if you listen to my streams long enough that I had four main influences in my time as a trader. Um, Options Alpha, Kirk taught me a lot of the very basics. Tom Sosnoff, the owner and developer of Thinkorswim, who now owns Tastyworks after he sold Thinkorswim to TD Ameritrade. He has revolutionized the way that we do business with options now. And his back testing continues to prove that what we've always done is completely wrong. And he was a major contributing factor. And then Don Kaufman, Corey, and Doc Severson, all of those guys over there from the Theo group. But mainly Don Kaufman. The guy is a quant trader and got me looking at options from here without needing to go to a chart at all. Support, resistance, trend, and momentum is right here. And you do not need to go to the chart and look at a candle to see it. If you've watched videos from the New York Stock Exchange or from the floor, you'll notice that they're not looking at candles and charts. They're looking at numbers. Statistical arbitrage and quant trading. So looking at the list, what do we have red? What do we have green? The green on the screen, we've got a lot of the FANG stocks, Microsoft, Facebook, Twitter, all green, Google, Apple. We got the Russell. Oddly enough, the VIX. Bonds are up. The futures are up. And Netflix, Intel, Amazon, the banks, TBT. There's one to pop and take a look at. A lot of weakness, gapped down. You know, I'd like to be able to say that, oh yeah, no, everything that I come up with, that I talk to you guys about, I developed it all myself. But unfortunately, options have been around since, you know, I was still uh, running around in shorts. So you can't reinvent the wheel. You know what I mean? Calls came out first, and then within the decade, puts came out, and Wall Street spent billions of dollars to find ways of trading it and to back test them, and then Tom over at Tastyworks has spent millions and millions of dollars to do even more work. So all we have to do is understand what they've already done and find ways to apply it into our own trading, um, and develop strategies that fit that understanding. But we can't compete with that kind of resources and that kind of history. So Tesla's still pulling back. Bank of America is still down 2%. XLF is weak. Netflix, Costco, FedEx. Let's go take a look at FedEx. Now, one thing that I like to use a lot to get a picture of the market and just kind of occasionally glance at it through the day, this is cumulative tick. This is the 4 markets, and we want to see when they're moving in sync. And you can see that I'm on a 5-minute chart, so each dot is 5 minutes, and we have not had market sync yet. But we've got a strong push in the tick. The Qs are running right behind it, and the Russell is behind those. This is just something to glance at through the day to kind of get a feel for how the market is doing overall. From the trending stock twist list, NKTR is down 10.5%. All right, I've shut down just about everything I can shut down, so hopefully that will speed things up a little bit. So hello over here in YouTube, coming back over to take a peek, see how everything is going. Beyond Meat with that downgrade is really just presenting some weakness. We could get some opportunities in that once it comes back around. The if you're looking for a place to find those analyst upgrades and downgrades, your own broker is a really great place to start. So if you have a TD Ameritrade account, you can go to TD Ameritrade. They have a list of analyst upgrades and downgrades. They've also got, what do they call it? It's like a continuation, right? Where they just put out a statement saying what I said last week, I still say this week. And then Fidelity, I have found more comfortable for analyst upgrades and downgrades than TD Ameritrade, but either one of those are just fine for finding that information. If you are using black box stocks, or if you've had an opportunity to use it before, maybe in the free trial and you didn't keep it, there is a free version of black box stocks on Thinkorswim. Now, you got to realize that you get what you pay for. Black box stocks buys level 4 options data. It costs them millions of dollars, and so they charge you for it. Plus, they built their own proprietary software to read that data and present it to you. So to use their services costs money because they're trying to recoup what they've already spent. For free, there is something a bit like it on Thinkorswim, but it is free. Is it not in paper? It's supposed to be flash, but it's not here. So I'm thinking it's not in paper. I was going to show you that. It would be another tool to use for finding something to trade, but no such luck. Had to get me some coffee. Good morning, Dan. How you doing, buddy? You can see this strong trend that we've been having in Walmart for the last 2 weeks. And what I just threw on there is a linear regression line. And you can see that every time it stretched too far away from the line, it snapped back in the other direction. On an intra-week or even in a day-to-day basis, you can find trade opportunities by using that linear regression line. Even if you're trading intraday, you can throw that on there. It's a drawing tool, not an indicator. And you can look for when price stretches too far away. Out of all the things that we can use for measuring price, this one takes away all of the ambiguity. You don't have to try to use the Ouija board and figure out what it's trying to tell you. You throw it on there, and it does all the work itself. I spent the last 8 weeks in statistics school because I'm working on my master's degree, and we had to do graduate statistics. And the linear regression is a part of that. Now, we don't see dot plot in a lot of things. There is one website that I know that uses it, Koifin, but a linear regression line is using dot plot statistics and mathematics. I want to refer you to Lucian's video on gap, but I just did a video the other day on day trading gaps. So, two things: day trading, morning gap, fade the gap. Here's my video that I just did the other day. But that's not the big picture on gaps. And for that, we want to go to YouTube. So if you go to YouTube, and remember that the Bullish Bears has years and years and years of content on our blogs, on our free YouTube, and our educational content. And that more often than not, if there's a topic or a concern or a question, we've probably covered it. And if we haven't, throw us an email telling us, hey, I looked for this subject and I couldn't find anything. So always type in Bullish Bears and then type in whatever you want to look for. How to trade gap up, how to identify gap down patterns, how to trade gap and go strategies, on and on and on and on. Years and years worth of content. So when it comes to gaps, it's not just a discussion about, oh, I'm going to trade today's gap. There's also the more of the bigger picture gap. If you go look, say, at Target and what its chart looks like from the last 3 earnings, that would be a completely different discussion about gaps. But it basically comes down to the idea that sooner or later, price is going to fill that gap. It doesn't have to happen today or even this year, but eventually, price is going to fill the gap. I really recommend that you watch Lucian's video because, as I said earlier, it has stuck with me from the time I watched it on, and it was a pivotal moment in my learning. You will get something out of it, and it will stick. Strong move in Goldman, right back up into the open from 2 days ago. We're pushing right into an area of resistance. I'd be looking for a little bit of a pullback there. Again, it's already pulled back once. I'm pretty excited about. I see you guys talking about having your family involved in your trading. I'm convinced that my wife should not go back to work after all the health stuff that she's been dealing with, and I've asked her to help me with my new business. So it's not my new business; it's our new business, and that's going to be pretty exciting. I'm the only one in my circle who deals with the marketplace. Nobody, none of my friends, family, or anybody gives a damn about the market whatsoever, and so I have no one to talk to. But it's going to be real exciting to have a partner in crime. There's a lot of research out there that says trading with your spouse actually increases your trading performance because you're held accountable to somebody else, and you have to explain what the hell you were thinking when you took that trade. Love it. I thought that was the funniest thing in the world, especially from a psychologist point of view, right? Um, and I've actually gave that advice to people that if you are about to put on a trade, imagine having to go to a panel of people and explain to those people why you took that trade. What would your answer be? Oh, well, it was moving, so of course I had to get in. So, uh, really good advice. Think about what you would have to tell somebody before you get in the trade, and then maybe it'll help you reevaluate if you really want to get into that trade. Because if you can't articulate the reason that you were getting into the trade in the first place, probably shouldn't have took the trade. Oh, but it was moving. I had to get in. It was moving. Couldn't just watch it move and not participate. Well, when it comes to the head and shoulders, I gotta admit, I am blind and I can't see the damn thing. I've kept it printed out on my desk. I draw it all the time, and more often than not, I'm blind to it. But first of all, EMW, you'd have to tell me what time frame are you looking at, right? Because if you're on a, there you go, that'll help me out. So let's go to the 2 minute. I don't see a head and shoulders necessarily. Let's do this. How's that do it for you? So a lot of the times, people get hung up um, on the exactness of a pattern, right? Cup and handle is one of my pet peeves. That if it forms a V, is it still a cup, right? Or does it need that basing pattern at the bottom and then the wall of the cup coming up to be a quote cup? And then you would be looking for the handle. So when it comes to the head and shoulders, ask yourself this: what does the head and shoulders pattern represent? Does it represent a continuation or does it represent a reversal? And that way, when you get to this point and you're saying, well, I don't know, is that really a head and shoulders? Uh, Maybe it is, is it? Is it not? Should I? Well, are you looking for it to continue or are you looking for it to reverse? What does head and shoulders represent? Which one of those two is it? And then you won't have to worry if it's, quote, an exact head and shoulders pattern or not. You're looking for bearish divergence. You won't find it with uh, candles. You don't see divergence because what are you diverging from? To have divergence, you have to have two things at least. That way, they are diverging. Just think about the MACD. Moving average, convergence, divergence. It's two things. Sometimes they converge, sometimes they diverge. If you're only looking at candles, what is it diverging from? The candles? You could throw on, say we don't look at numbers since numbers are confusing to you. We can bring up money. We'll just pick one of these. Now we've got money and we've got price. And then we can zoom in. And now we have something to look for to identify divergence. Is this going down while this is going up? Is this going up while this is going down? Did one set a higher high while another one set a lower high? This would give you some form of divergence between money flow and price. You can do the same thing with RSI or the on balance volume. INFN. Okay, give me just a moment to deal with some homework. Hey, everybody over here on YouTube, take an opportunity to come by and sign up at the Bullish Bears for a 14-day trial and come into the chat room, hang out, and I'll look forward to seeing all of you there.